I'm joined by Adrian Foster of Rabobank. Thank you very much indeed for speaking to us. So as we were hearing there, Japan's GDP really way lower than economists were expecting. What does this tell us about the state of the economy right now?
Certainly was a disappointing number, and just focusing on the simple growth rates quarter on quarter, it's expanded by 0.1%, so the most meagre of expansions in the second quarter. I think just place it in the context of the prior quarter, it grew 1.1% then. That was really overstating the momentum in the economy. So one thing we can do is average out those two quarters, and I think that really gives us a truer picture of the underlying momentum. But there's no doubt that this number taken in isolation was weak, with private consumption flat on the quarter. That was the main area of disappointment.
Absolutely, and also the report showing export growth slowed as Japanese exporters suffer from the yen's advance, with saying they're to a 15-year high against the dollar. To what extent is this going to put pressure on the Bank of Japan to take measures to combat a stronger yen, to effectively ease monetary policy even further?
Certainly, it's a big issue, and I think actually if I look at that second quarter GDP number, I don't think the strong yen has actually impacted the growth rate as we see it yet. I think the strong yen is something still working its way through the system there, and it's working its way through by impacting profitability in the nearer term. And I think profitability has been dented by the strong yen. And if you look to the weakness in the Nikkei over the last few months, I think that's the main reason for that, is the yen's rise. So it is a very important issue. And you were right, you pointed before that is it a strong yen or a weak dollar? If you look at the main cyclical event of the last couple of months, it's really been this crushing of US interest rates. Now, of course, Japan has a current account surplus. That's a structural feature. Japanese savers need to be attracted into dollar assets to recycle those savings. With US interest rates so low, it gets that much harder to do it. My guess, however, is around this level, 85, 86, the risk-reward on a sort of for a strategic investor starts to make more sense than, of course, at $90 yen. So I don't see it coming to intervention, for example. I think it's an issue which is going to be discussed quite widely, and there's going to be some high-profile statements hitting the wires, I would guess. But I think dollar yen around this 85, 86 is very, very close to the bottom.
And as you well say, the contribution of consumer spending to growth, a key figure, because of course it accounts for 60% of the economy, was unchanged compared with the previous quarter. Does this increase the risk of a double dip?
Yes. Yeah, when consumption's flat in any economy, it's clearly a negative. There were a couple of positives in there. There was private investment actually expanded on the quarter, 0.5%, building on a 0.6% the prior quarter. And as you say, net exports continues to make a positive contribution. The thing with net exports, so if you just look at the net export cycle through the last couple of years, heavily dependent on global growth. So in that sense, a big part of the Japan outlook, and I should say it's more dependent on global growth than you would think for an economy of Japan's size, even though it has just dropped down the rankings to number 3. So that the outlook for global growth is very much an important element of the Japan equation. We actually think the US avoids a double dip. We think global growth holds up. So in that sense, we're perhaps a little bit more optimistic on the outlook for Japan in the second half. But clearly the growth rates we saw fourth quarter last year, first quarter this year, are very, very unlikely to be repeated.
And of course, what about the significance of these figures for China seeming to confirm its status as the world's second biggest economy?
Yep, I guess it's one of those much long-anticipated long-anticipated baton changes, and clearly it's well and truly underway. I guess the specific quarter that it happens in, you can move the currencies around a little bit and come up with a different result, but I think it's really just part of this long-term trend of China becoming increasingly dominant regional and of course, global player.
And interestingly, you say that you're quite positive about the outlook for the Japanese economy in the second half. Is that right? And yet there are many analysts saying that a stronger yen will have a negative impact on exports and company profits in the next few months.
I think that's right. It's very hard to deny that the yen is having a big impact on profitability. And as I say, we see it clearly through the Nikkei, through the stock market there. But I think Japan is well sort of geared into global growth. And if I look at the cycle in the US, it seems to me to be purely predictable based on the policies that have been thrown at the housing market in the US. So, of course, we're in the aftermath of a tax credit. The US housing sector's weak. That's going to take a couple of months to play through, but by the fourth quarter, I think we're going to see some tentative signs of improvement in the US conditions, and there's an underlying positive, I think, for the Japan recovery.
Adrian Foster, Asia Head of Financial Market Research at Rabobank in Hong Kong. Thanks very much indeed for your thoughts. We appreciate it.